Okay, guys, welcome to this lecture 4, part 2, everyone. This is going to be a small lecture because you already have watched the lecture 1. So, first of all, lecture 4, part 1, sorry. I'm going to revise very quickly the part 1 of lecture 4 before I will begin with lecture 4, part 2, guys. Everyone understand? If everybody understand, write yes, please. Guys, the part 1, I teach you guys how to use Fibonacci retracement tool to take the trades. How can this tool can help us in trading whilst trading? Now, Fibonacci retracement tool from its name tells us that it is a tool which we can use to see the retracement. And the question arises to see the retracement, to check the retracement of what? To check the retracement of a leg, of a price action leg. Now guys, before this I'd say the price moves in legs. I had shown you exactly, you knew already that the price moves like this. Rises, goes back, it rises, and then goes back. Now guys, remember these are your legs. Now push up, came back, push up, came back, guys. These are your leg 1, leg 2, 3, 4. Now what is retracement? Now this leg is a push up and this move to the downside is called retracement. It retraces. So this move to the downside is the retracement of this leg. This leg is move to the upside is a leg, and this move to the downside is the retracement of this leg. Does everybody understand this already? Great. I'm gonna give you examples of the leg. Guys, this move to the upside, that is your leg. So the first thing when what you're trading is identify your legs, guys. This is your leg. Guys, remember, this is also your small leg. This is also your small leg. This is also your small leg. So there are many legs. It depends which leg you're looking at. That is your leg. That is your leg. The price moves in legs. Always remember, guys. The price moves in what? Say what? Legs. Yes, remember. This is institutional, what I'm teaching you guys, that the price moves in legs. People don't listen to this. Never focus on this. Legs. So everybody's clear on the leg, right? So the first thing is to identify your legs. So if this is a leg, what does the retracement means? We want to see how much a price can come back. Retraces. The price was here, the price moved, pushed to the upside, and now the price is rejecting. Now, if the price is rejecting, the possibility is that the price will come to the downside. So the retracement tool we use is to calculate how much the percentage price has came back of this move to the upside. How we use this? Take this tool, guys. We apply that tool on the leg of which we want to find the retracement. It is not about the time frame. It is not about the time frame, guys. On which time frame you use it. That is not the this is now how you should approach it. And again, I saw people asking me the same question. Which time frame do we use it on? That's a wrong question. The question is which leg do we want to take a retracement of? Make sense? Of which leg we want to see how much the price has retraces. So you need to decide by leg, not by the time frame, guys. Understand? So I took this and I want to take a retracement of this leg. So start from the bottom and take it where the legs ends. That is your point B, guys. Understand? That is your A. That's your B, guys. From where it starts, if it's a wick, it's a wick. If it's a body, guys, if it's a body, remember. Now, these are your retracement levels, guys. Price is coming down. If the price is here, it means 50% retracement. Like 50% price came back of this move A to B. That is what the retracement means. If the price came back at 68.6, it means the price came back 68.6 percentage of this move. Everyone understand of this move? Does everybody understand this? Now the price is coming back, guys. Let's say if the price came back at 61.8, this move ends, where the retracement ends is your point C, guys. Always remember. Where retracement ends is your point C. Understand? Does everybody understand? Does everyone understand this completely? Great. Now remember, if the price rejects at 38.2, there is a possibility the price will aggressively move to the upside. If the price rejects at 61.8 percentage, which is normally where the price rejects, because that is where, if there is a retracement move, that is where the banks want to take out the profit of that retracement move, guys. The price will move slowly to the upside, not very aggressively, but with a good pace, guys. And if the price rejects at 78.6, 88.6, guys, remember the price will move very slowly from there. Means this move to the upside will be slow, guys. It will be very aggressive at 38.2, guys. Normally, the market likes to take the profits of leg B to C at 61.8 Fibonacci. Remember, guys. So everybody knew and understand the properties of the price action as far as the Fibonacci retracement is concerned. Say yes. Say yes, guys. Okay, great. Guys, remember, if the price breaches 100%, 100%, it breaches 100%, guys, there is no retracement move. It's not a retracement. Retracement is valid as long as the price remains up till 100%, because retracement means how much the price retraces came back of the move A to B. If the price breaches A, there is no retracement. It's a trend changing move. Then it's not a retracement move. Understand? Everybody understand? So the point C is valid until the price remains at B or before B, between A and B, guys. Everybody understand? Very important point, guys. The point C is only valid if the price remains between 0% and 100%, guys. Everyone's understand? Does everybody understand, guys? Okay. So let's say if the price ideally rejected 61.8 percentage, guys, that is your point C. So everybody understand so far? Say yes. And then I talked about the how to approach the trade B to C, guys, and again B to C and C to D in my previous lecture. So you need to go and revise that and make sure you totally understand, because that is not relevant here. The relevance is to establish A, B, and C. So everyone clear 100%? If everybody's clear, say yes, please. Okay, great. Now, guys, we have established what? Point A, B, and C, right? Everyone can establish point A, B, and C. A, B, and C. What is A? Well, establish, identify your leg. From where the leg begins is point A. From where the leg ends is your point B. C is your retracement of leg point A and B, guys. Retracement. Remember, C is only valid if it is between A and B. Very important what I'm saying. It can go to 100%. It is valid, guys. It can go to 100%. It's valid. If the price breaches, if the price breaches, if the price breaches A and come back and you have a pin bar, if the price breaches this, came back again. So remember, you'll have what? Like a pin bar, right? Like a hammer. A is still valid, guys. Then this C is still valid. Sorry, the C will still be valid. Understand what I said? If the price breaches this, yes, exactly. At double bottoms, the C remains valid, guys. Yes. So everybody understands? Normally, ideally, the market like to take profit of leg of move B to C at 61.8. That is the best level, guys. If it does, that is where the C is. So does everybody understand how to establish A, B, and C, guys? Say yes. Everybody say yes. Because guys, if you don't understand, you need to ask me this question. We can't go forward without identifying point A, B, and C and the rules relating to it, guys. Okay, great. Now, now remember, guys, the price came back to C. Price came back to C. And remember, Fibonacci retracement, we use it to see continuation trade, guys. The market moves from point A to B, which is an uptrend, right? It is an uptrend. Now, we want to see how much the price can comes back from retrace from of the move A to B. That is why we use retracement tool, right? A to B, the price came back and rejected it and stopped at this level. We apply the retracement tool, right? It gives us the 61.8 Fibonacci. So we can say that the price had moved 61.8 percentage of point of point A to B, guys. Everybody understand? And where it rejects, and that is our point C, guys. Everybody understand? Okay. Now, guys, the price obviously will move from C. If it rejects here, it will move from C and move to the upside, right? Right, guys? Everybody, right, guys? So, guys, this move from C onwards is called C to D, guys. It's called leg C to D. Everybody understand? This move to the upside is called what? C to D, guys. Everyone understand? Guys, remember, A to B is your leg. B to C is the retracement of that leg. And then C to D is the move to the upside, which we call expansion. C to D is what? Extension of the leg B to C, guys. Yes. CD is extension of leg BC, guys. Everybody understands? Does everybody understand this? We call it extension. We also call it what? C to D is expansion of leg B to C. There are two terminologies we use. Expansion, extensions, guys. Continuation, yes. It is continuation, but it is a continuation trade. It is in the direction, it is a continuation trade of move A to B, not B to C, please. Not B to C. It is not a continuation trade of B to C. Continuation trade of leg B to C Khan will be in the direction, in the downside direction. It is a continuation trade of the trend. And what is the trend? The trend is A to B. I'm not talking about risky. What is risky? I'm not talking about risky here. Focus on what I'm saying. What I'm saying, just focus on this, please. What I'm saying, just focus on this. Do not bring the risky stuff in it. What is the trend right now? Continuation or reversal is concerned with the trend, right? So what is the trend? Yes. So what is the trend move? Which one is the trend move? Yes, which one is it? Tell me. A to B, exactly. So it is, so which move is continuation of A to B? Which leg is continuation of A to B? CD. No, no, not ABC. CD. CD leg is continuation of leg AB. Do you guys understand? Do you guys understand, right? Continuation of AB is CD. And which move is reversal of AB? BC is the reversal of AB. So guys, bring clarity to your trading. You need to approach the trades and the legs very carefully. You need to exactly know which leg you're trading. Reversal leg, continuation leg, reversal leg, continuation leg. I discussed this in my previous lecture. The characteristics of taking a trade from of leg BC and series, the approach has to be different. It's like you have a gun and you are a sniper. You have two guns and you are a sniper. So you kill the bird BC with a different gun and bird CD with a different gun. Remember, so you need to know which. The first thing is you need to know exactly which bird you're going to kill. Either it's BC reversal or CD continuation. Everybody understand this? Please confirm if you guys understand this so far. So CD is extension of leg AB. Yes? CD is an extension of leg AB, right? So now guys, the question arises how far CD can go, how far this D can go, and where this leg CD will ends. AB is the trend, BC is a counter trend, CD is a continuation of AB. Absolutely right, absolutely right, absolutely 100%. Okay, understand? Everybody understand? Zain, Khudayar, Khan, Boston, Lee. Let me see who's there. Lee, Tal, Sharon, Ogie, Michael, Mark, Lorenzo, Gerard. Everybody understand, right? Okay. Now, guys, I'm moving forward. It's a small lecture. I'm moving forward. So it's not just, you need to understand exactly the inside out of everything, right? So take out the retracement. To calculate the retracement of the leg AB, we use the retracement tool, right, guys? And now, guys, the question arises how far CD, how far the D can go, and where would this leg CD will end? That's a question. Imagine the C has started moving. If we already know where D will end, the possible level that where the D can expand to, extends to, expands to, extends to, expands to, guys, extends to. Would it not be very easy for us to set our TP levels there and just go and chill out with our families? Right, guys? Exactly. So now there is a tool which is provided by the institutions which we can apply and take out the possible institutional levels of leg C and D. Institutional levels, that is a tool the institution applies to calculate the possible target levels of leg C and D. Those levels are institutional levels where institutions like to take profits. Guys, when you see a leg market moves to a certain level and it stops at a certain level, that means at that level the institutions are booking the profits. Understand? So institutions apply that tool and take out certain levels where they like to take profits, and we will be applying the same tool on our charts to first of all identify those levels. So before even the move the D has approached those levels. We already knew in advance where the institutions would like to take off their profits. Understand, guys? Because this is an extension. CD leg is an expansion, and we want to see how far AB can extend. AB can extend. AB CD can extend. CD can extend, extend. We use this tool, guys. We use this tool. Understand, guys? Everybody understand? And we call it expansion tool. Fibonacci expansion, Fibonacci retracement. So you write it like this. Fibonacci expansion. You will see this used like this. Some systems use it like this. Fibonacci retracement. Understand, guys? Everybody's clear? Okay, great. Go to your insert. You see Fibonacci is there. This is retracement tool. You will see fans. You can also use fans. I can teach you fans, but they're not very effective as compared to the expansions. You see this expansion. So in MT4 platform, you'll see the word expansion, and that's what you need to take out, right, guys? Everybody understand? Now, guys, how to apply this tool? Very simple. Start from point A, guys. Go to your point B. It has three ends. A, B, and C. This tool has three ends. Can you see this? It provides you with three ends. The beginning is at A, B, and C. You need to make sure you connect this from A to B, and your C. Take the C where the C ends, guys. It will be at some retracement level. Understands? Understands? And it gives you, guys, three levels. Guys, just write down on your computer, write down on your pen. Go to expansion properties and write down these levels, guys. 61.8 Fibonacci expansion. 61.8, guys. Write down these settings, guys, right now. I'm gonna give you 2 minutes. Just write down these settings. These three numbers we need. These are institutional numbers. 61.8 Fibonacci, 100 Fibonacci, and 161.8 Fibonacci. You know where the move ends, and that is where you begin Fibonacci. So if the move ends and there is a wick, it has to be a wick, right? It can't be a body. Make sense? Yes. 61.8 Fibonacci, 100 expansion, 100 percentage Fibonacci, and 161.8 Fibonacci. Everybody writes this and exactly writes these properties, guys, because you need to change these on your MT4. Please. I'll give you a minute. There are other expansion levels also. Remember, guys, 50%, 23.6%, 38.2%. Those are not institutional levels, guys. I've just selected institutional levels where institutions like to take out like to expand and extend to these levels, guys, which are 61.8, 100%, and 161.8 Fibonacci, guys. Remember, there are many other Fibonacci levels, guys, but remember, Fibonacci expansions levels, those are not institutional, guys. Yes, institutional, just three of these. The guy I had learned this. Guys, I've learned a very advanced model of legs, actually. Very advanced model of legs during the course. He was a European trader. He was a European trader with an experience of 33 years at the New York stock market, guys. He used to work in one of the banks who moves the market, guys. He used to work in one of the banks who used to market. He told me that the institutions like to take profit on these three, expand on take profits of an expansion move on these three levels, guys. And he was right, because I had applied these over the years, and it is true. So you guys understand? Everybody writes down the level already? Please confirm. Everyone. Zen. Okay. Press OK, guys. So guys, these are your three levels, which is also your move leg. So this is your D1. No, you don't have to use reciprocal levels. I do use them, guys. What I'm teaching you, follow that. Do not complicate yourself. Why would you need reciprocal? Who told you the price moves to the reciprocal level all the time? Just tell me this. Does the market moves by the fact, does the market moves? Like you said the right thing. They are reciprocal levels, but it doesn't mean the price will eventually always go to those levels, guys. Remember, who moves the market? Institutions moves the markets. So would you say that the price moves on the reciprocal levels, or would you say that the price institutions like to take profits at certain levels? Which one would be the right thing to say? Certain levels, exactly, because somebody is moving the market. So those people likes to take profits at a certain level. That is the right statement to make. You can take out the reciprocal levels, which Quinn said correctly, but it does not mean that the price will take profits on these levels. No, Quinn is right. You can take out the reciprocal. Reciprocal of certain level is that, certain level is that. But again, guys, it doesn't mean our objective is what while trading? Our objective is to identify institutional levels. What I said on the first lecture. How would you take a money when you don't know the institution levels? Where you want to mark those levels on your charts where institutions are marking on their charts. You want to trade on the levels where, on your chart for institutions. And by using Fibonacci expansions, 61.8, 100% and 61.8 Fibonacci are institutional expansion levels where the market likes and institutions like to take out the profits. Makes sense? So there are many other levels in between, guys, but institution normally doesn't like taking bulk of their profits on these levels, and hence I'm taking out the noise and just marking the institutional levels there. Yes, guys, EJ is rejecting 61.8 Fibonacci. So hopefully I'm in a short trade on EJ again. I was scalping yesterday as well, actually. Okay, guys, focus on this, please. So guys, 61.8, 100% and 161.8, guys. So 61.8 is your D1 TP, guys. 100% is D2 TP, guys. And 161.8 is D3 TP. So everybody understands? How can the time frame matters when we are trading by legs? Come on. How can the time frame matters? How does the time frame matters if I'm telling you to go by legs? Come on. Does time frame matters here? Did I discuss the time frame? Did I discuss the legs? So come on, guys. The time frame doesn't matter. Time frame is a zoom in and zoom out. That's it. Legs. See your legs again, please. Okay. Yeah, touch your legs today after this lecture. It's fine because there will no more legs discussion in my training. Okay, guys. Now D1, D2, D3. Now, guys, try to understand. Try to understand now. I'm gonna teach you the price action. Try to understand. Okay, guys. Remember, Jake did discuss 100% is these levels are what? These are expansions and extensions, right? Expansions and extensions. And guys, my apologies. Please correct this. My apologies. Expansion and extension of move AB, guys. Everybody understands? Please make a correction. This Sorry guys, let me correct. CD is an extension of AB, guys. Yeah, please make a correction. My apologies. I didn't realize that actually. Okay, remember guys, I think I'm sleepy, I think. CD is an expansion of leg AB, guys. Remember this. CD is an extension or expansion of move AB, guys. And BC is the retracement of move AB, guys. Understand? BC is retracement of AB, guys. Understand? Does it make clarity? Does it bring clarity, right? Okay. So guys, now I'm going to tell you the characteristics of the price action. Remember, there are many Fibonacci levels during the expansions. There are many Fibonacci, 23.6, 38.2, guys. You can mark them on your charts, but again, it will bring noise. I like to mark only those levels. My objective is to trade with the institutions. I like to mark only those levels where institutions are interested, and hence I've deleted all the other levels, guys. Understands? Okay. CD. Now, listen very carefully. The price starts moving and the price goes first to 61.8 Fibonacci, guys. There is a possibility that the market might take all their profits there of this expansion legs and it ends there. There is a possibility this moves ends here. The institution might take all the profits here at 61.8 Fibonacci of A, move A to B, guys, and this moves ends here. So legs ends here. Understands? The price rejects here, guys, like this, and then goes away. So the expansion move was only the expansion move, and the market took out the expansion profit taking at 61.8 Fibonacci, guys. So you need to exit your trade if you see a reversal here. Make sense? Make sense, guys? If you see a reversal here, make sense? You need to understand, do not be rigid. Do not be rigid that the price will go to 161.8 Fibonacci all the time, 100% all the time. Remember, there are three institutional expansion levels where the market likes to take out their profits, right? So it can be, there might be a possibility the market will take all their profits at 61.8 Fibonacci. Understands? One possibility. The second possibility is this. Second possibility is the market like wanted to take profit at 100% of the move A and B. So market goes up, right? Market goes up. In this situation, guys, if the market wants to take profits, all of it at 100%, leg D will end at 100%. And then what happened? The market will move away from there. Make sense, guys? Say yes if you guys understand. And the third possibility is the market likes to take profit at maximum 161.8 Fibonacci, guys. The market will take the price to that level, and that is where the profit taking will take place. Does everybody understand? So these three possibilities. So do not be rigid with your approach, guys. Remember, use these levels as support and resistance, right? If the price rejecting at 61.8 and 61.8 acting as resistance, maybe a possibility the expansion moves ends there. If the price breaks this, retest, then you hold your trade, or you maybe re-entering again to 100%. That might be your next entry, guys. Understand, I'm showing you the entries using Fibonacci expansions. And if the price rejects at 100%, maybe you want to take a sell trade there where that leg ends. Makes sense? But if the price breaks 100%, retest, and then the possibility is the price will move to the upside to 161.8 Fibonacci. So on the retest is your another entry, guys, in the direction. And normally the leg ends at 161.8 Fibonacci, guys. Normally the leg ends around that level. It might end above it. It might end above it. Do not be rigid. It might end above it. But normally what happens? There will be a reversal. There will be a reversal. Normally you'll see after 161.8 Fibonacci, guys. So it means I will not be seeking continuation of C and D. I will be expecting the leg C and D to end around these levels, guys. So if it does, exit your trade. And around these levels at 161.8, always look for reversal trade to the downside, guys. So that's your trade, reversal trade, guys. So guys, you can take a trade using retracement tool from point C, right? The move C to D, guys, and you already can identify the possible profit taking levels, which can be 61.8 Fibonacci, 100%, and 161.8 Fibonacci, guys. Everybody understands? How would you take a continuation trade? If the price breaks 161.8, retest another entry in the direction, continuation trade in the direction of D. If the price breaches 100%, retest maybe another entry, guys. And if the price reaches at D3, it breaks. There is no continuation trade, guys. There is a because normally 80% the legs ends there. This is the exhaust level. That is where the final profit taking takes place. Normally, the price even breaches this. Do not take a continuation trade. Look for the reversal trade at 161.8 Fibonacci. This is the end. Understand? No matter the price is acting near or breaches 161.8 Fibonacci, guys. Guys, do you completely understand? I'm telling you the scenarios, guys, based on my extensive experience. Do not be rigid to utilize these points as support and resistance, but at 161.8 Fibonacci, you will never be looking in the continuation in the direction of D, guys. Always be looking for the reversal trades. Everybody's clear? If everybody's clear, please confirm. So normally where the D ends at 161.8, normally we like to seek a reversal trade here. So it can end here. It can end here. That's fine, Manish. You almost finished. You can go now. It's fine. Just watch the video later. It can end here. So guys, do you understand this expansion? Do you guys understand the properties of price action based on the rules of expansion, guys? Say yes. This move C to D, guys. Understands? Great. I'm going to show you in the downtrend. The market moved to the downside, guys. So where it starts is move leg A, point A. Where the move ends, it's point B. Now the retracement has started to the upside. Guys, to take out the retracement level, you can use the retracement tool from point A to B, establish, and wait for the price action. C is valid. C is valid as long as the price at any of these levels, guys. Ideally, I like to see rejected at 161.8 Fibonacci. This is ideal, but it doesn't matter. The price can go to 88.6, 100%. So let's say if the price rejects at 61.8, what is rejection? A pin bar, an engulfing pattern reversal. That is your point C, guys, right? Once you establish a point C, the move from point C onwards is called a move D, guys. CD, right? You want to calculate this move, guys. How can you calculate this move? Let me show you. Using expansion tool. The CD is an extension of move A and B, guys. Remember, CD will always be in the direction of A and B, guys. Understand? You take out expansion from A to B and B to C, guys. Understands? The possibility is the C move. C to D can end at 61.8, 100%. And 161.8 is Fibonacci's maximum expansion. Guys, remember, is it clear now? Okay. Guys, remember, 100% means what? 100%. No. You don't have to. 100%. 100% means what? 100% means same length as A and B. Because remember, it's expansion of move what? A and B, right? Look, 100% is of A and B, guys. 61.8 is this move. It's 61.8 of A and B, guys. Understands? And 161.8, this move to 161.8 is of A and B. Percentage of A and B, 161.8% of A and B. Make sense, guys? So if you want to calculate 100, the same length as A and B, guys, its principle is very simple. Make sense? From C, C. Okay, are we clear on this, guys? 100%. If we are clear, I'm going to move forward. So this is the concept, and remember, you can take a trade C to D, guys. First trade you can take C to D. This is your first trade, ideal trade. Understand? Using a retracement tool. Retracement tool, you can establish C, and then you can take a trade, and you can use expansion levels to project the target levels of that move C to D, guys. And remember, guys, you will always have a reversal trade at D. Where the D ends, you will always find a reversal trade. Make sense, guys? Make sense? So two possible trades, guys. Using retracement tool, you can take a trade C to D, and you can use expansions tool to take out this length, how far the D can go, C to D can go, guys. In advance, the possible reversal trade D onwards. Make sense? Say yes if you guys understand. Okay, I'm going to show you the examples now. So guys, first of all, let's say this is your leg to the downside, right? So guys, the question arises, where do I apply C and D? Where do I apply C and D? It is not which time frame you should apply, which time frame you should apply. It is all the question of legs, legs, legs. Do not confuse yourself. You can take out ABC of anything, right? What did I say? You can take out the C of any AB leg, right? Leg AB, any. So time frame is irrelevant. And D is just a calculation of move C to D. That is it. Expansions of move C and C to D. How far can D can go, right? Again, related to A and B, because CD is an expansion of move A and B, right? CD is an expansion of move A and B. So the bottom line is A and B is important. The whole story is moving around A and B. BC is the retracement of A and B. CD is an expansion of A and B. So what is important? What is the core? What is the essence? What is the essence of Fibonacci then? Tell me, guys, what is the essence of Fibonacci then? A and B, leg A and B, guys, leg A and B, leg A and B. Around leg A and B, everything is moving. Leg A and B, if you identify that B and C is the retracement of A and B, C and D is the expansion of A and B. Understand? So what it is, what if you want to apply all that Fibonacci crap, what is it? You need to identify A and B. You don't have to say that I need to go search which time frame do I have to go, where should I look for the leg, which is the leg, when it's where would I apply this? All you need to know is of which leg you want to take out the retracement using a retracement tool, of which leg you want to take out the expansion of leg A and B. Simple. Make sense? Do you guys understand? This is very important what I'm teaching you right now. The whole concept and theory moves around the leg of which you want to take out the retracement, the leg of which you want to take out the expansions. Make sense? Make sense? Because this is very important what I'm saying. It removes you confusion how to apply this concept on the charts. People are rigid. Oh, where should I apply? Which leg should I apply? There are 516 legs. There are 516 legs. Where should I apply? Look, there's so many legs here, right? The question is, where should you apply this? The answer is of which leg you want to take out the retracement first, or which leg you want to take out the expansion first. Common sense, right? Does it make sense? Look, there are so many legs here, so confusion can arise. Which leg should I apply? Guys, it is your choice of which leg you want to take out the retracement, which bird you want to shoot. It is your choice. There are legs. Look, there are legs. 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 So it is your choice of which leg you want to take out the first retracement. And if you find the retracement, then of which leg you want to take out the expansion. Make sense? Give clarity. Do you guys understand what I'm saying? I'm spending more time on this because this is important, guys. Otherwise, you will be always confused in where to apply this shit concept. Make sense? Try understand. You apply this on the leg of which leg you want to take out the retracement, of which leg you want to take out the expansions. That is it. Okay, that's better. Okay, now I want to take out the retracement of this leg. See this? Imagine the price was here. And I saw this. So I was thinking, okay, the price moved from this point to this point, right, guys? Now, if I see the price moves from this point to this point, it is rejecting it. Possibilities it will go up. So I automatically know going up means what? What? Going up means what? What does the going up means, guys? Retracement exactly of A and B. Makes sense? So simple. I want to apply the tool and see how much it can retrace. Simple. So apply your extensions tool. Make sense, guys? And the price went up and it rejected at 61.8 Fibonacci. Can you see this? Because it rejected, I knew it is point C, guys. Understands? Guys, you understand this? Now, guys, it's very simple. Because price rejected at point C and start rejecting, give me a minute. Just give me a minute, guys. Give me a minute, guys. Just give me a minute. Let me Sorry, guys. Let me send me. My sister's actually text me actually. Let me reply back to her. Okay, guys. So, you guys understand so far, right? Everybody understand so far? Say yes if you guys understand. Okay, great. Okay, guys. Now the price rejects at C. Now you want to see how far the price can go from C. In advance, guys, you can use now expansion tool to calculate this, guys. Expansion, right? Where it begins. Obviously, it begins at a wick. So you have to start from the wick to point B, and then you need to take it to the point C, guys. Understands? Understand, guys? Everybody understands? Zan, Gerard, everybody understand this? So, guys, it brings out level 61.8 Fibonacci, 100% and 161.8 Fibonacci, guys. Yes? Guys, these are your institutional levels. So the first point of target will be your 161.8. The price goes and it completes its target. It price even goes further to the downside, guys, if you see, and almost at 100%, right? So now use this target as support and resistance until the price reaches 161.8 Fibonacci, guys. Very simple. Do not confuse yourself. The price came back, came down, hit 161.8 Fibonacci. The first is achieved. Then straight away went down, guys. 100%, right? And then it came back. So 100% is acting as support now, right? So it came back up again. Right, guys? Right? Right? Now, guys, remember what I'm going to say. Very important. This Fibonacci, this expansion move C and D is valid until and unless the price doesn't break what? What? Tell me. These expansion levels will remain valid until and unless the price doesn't break what? The price doesn't break point A, guys. No, point A, guys. Now the price can go to 161.8 Fibonacci, guys. It can come back up again. Then it can go further to it is valid as long as the price does not breach A, guys. This Fibonacci expansion tool will remain valid, guys. The price may do this. Make sense, guys? Makes sense. Remember, this is an expansion of A and B, guys. Expansion of what? A and B. As long the price does not breaches A, the A and B remains valid. Understand? Understand? Which is the focal point? The focal is A and B, right? So if the price doesn't breach A, the A and B remains valid. Yes or no? So take out the confusion out of your mind. A is a focal point, guys. These levels will remain valid and you can have them on your charts, guys. Because remember, this is an extension of A and B and it remains valid, guys. Regardless, price makes more legs, it doesn't matter. But this legs expansion levels remains valid. Makes sense? Remember this, it brings clarity to your trading, what I'm saying. Everybody understand this point? Zan, Khan, Boston, Gerard. People get confused when applying the tool and say, okay, I don't understand now what I should do. Should I take it out? Blah, blah, blah. Remember, what is the focal? The focal is A and B. What did I say? The retracement is valid as long as the price does not breaches A. The price doesn't breaches A because if the price breaches A, then A and B isn't valid anymore because we are talking about retracement of A and B, right? And then again, if the price breaches A again, the expansion will never not remain valid anymore. Makes sense because we are talking about A and B, right? Say yes if you guys understand what I said. Guys, tell me if you completely understand this, completely 100%. So as long as A is valid, the price doesn't breaches A, this expansion is valid. Okay, now, okay guys. Guys, the price went down. The price can move, keep on moving up and down, but maximum, the leg can end at 161.8 Fibonacci, guys. Remember this. Understand? I will be coming on this in a second, so just wait for this first. First, try to understand. I'm going to teach you. I'll be coming on this in a second. So the price can go to this level. Can you see the price went to 100%, rises again, 761.8 Fibonacci, rejected, back 100%, rejected. If the price rejects at 100% now, the next target is what? 161.8 Fibonacci, guys. You understand? Do you guys understand, right? So it's pretty simple. Utilize these levels at support and as support and resistance levels, guys. It's pretty simple. The concept remains very simple. Once the price start moving from C, these levels are acting as support and resistance. But the price can go above 161.8 Fibonacci and can move around this area, guys. Even if it does, this retracement remains valid as long as this expansion remains valid as long as the price is not breaching the point A, guys. Understand? Everybody's clear now. Okay, great. Now, guys, who asked me the question, if the price comes back, then what? Who asked me that question? Who? Genius was asking me the question. Gerard, no offense to you. What I'm going to say to you, you won't like it. You asked me a question which was a stupid question. Why? Ask me. Think about it. I want you to think about it. I am a sort of teacher who wanted his students to anticipate something. Instead, the teachers keeps on telling. So Gerard, come on, speak up now. The volume is on. You need to tell me why did I say that your question was a stupid question. Think about it. Focus. I've been yelling and teaching this for some time now. So you need to focus on this. Just think if the price comes back up again, right? What why this leg is valid, why this leg is remains valid, this never changes, there is a reason for it.
Yes, as long as it doesn't break A. I guess my question was
Okay, no.
if A, if A is never broken, yes, the retracement is still valid and the trend is still in place. But if later on in the trend, if C is broken, do we adjust our expansions to go to the new C point?
Yeah, this is your question is this, that if the price goes down,
And it comes up, and then later on
price
comes
goes
up a
down
little bit.
from C. Look, the price goes down on C from here. The price went down and it came back. Now it established a new C, right?
Yeah.
But that is your question, right?
Yes.
Exactly. Now just think about this very carefully. That is just another C.
And if
Guys,
that C goes higher than the other C,
okay, give me a minute. Obviously this is your another C. That C is at a different level. Yes?
hmm
Yes, guys, understands?
yes.
Okay, now you remember, do try to understand again what we are doing. Go back, try to understand the basics of it. Try to understand again. What did I say? Which is your vocal here? Leg A
AB.
and B, right?
Yes.
Your leg A and B is your vocal. So this is your leg A and B, right?
Yes.
So this is your leg A and B. Now understand this, very important what I'm going to say. This was your leg A, B, you took out the retracement C. So you want to see the expansions of leg A and B which retraces to point C. This.
So the other ones don't matter
No,
because
no,
that's what we're looking.
listen to me, hear me out. You want, try to understand. You want to take out the expansion expansion of leg A and B, which retraces to point this C, right?
Yes.
So we apply this. We applied this, right?
Yes.
Now see this. Now see this. This is the price came back to these levels, right? C.
Yes.
Okay, great. Now this is your point A where the moves begins. Now again, apply the expansions. Apply the expansions. What is the first thing you need to identify again?
At leg AB.
Exactly. Now the question arises, which is your leg A and B? This is your A and that is your B.
Mm. Okay, got you.
Do you understand?
Yes.
This erases the confusion out of the mind, guys. Try and understand. Try and understand. This erases confusion out of the mind. You need to understand the exact concept of application here. This is your point B. Automatically, what did I say? Expansion is what? Expansion is expansion
Leg
of
AB.
leg A and B, which retraces to a specific point C, right?
Yes. So
So
this would
guys,
just be a new
this C
expansion.
has no relationship with this A and B and C because these expansion levels are retracement or expansion of leg A and B, which retraces to point this C. So if the market came back to these levels and rises, it is your choice that you want to take out the expansion of leg from A, this leg. Look, what did I say? Rod, you need to understand of which leg you want to take out the expansions and retracement. Again, what did I say?
Leg A and B.
Yeah, I'm going to show you there more. There's so many legs. Again, this is the leg. That is also a leg. This could also be a leg.
Yeah.
I want to take out the expansion on retracement of any leg of which I want to decide, right? It is not the market, it is me who wanted to decide. So remember, do not confuse yourself into this. Understand?
Yes. Thank you.
Yeah. Okay, great. Everybody understand this? Does bring clarity? Say yes if it does. Okay, A and B, B and C, then the price. This This setup remains valid until the price doesn't breaches A. So these levels remains valid, guys. Understand? You can play out these levels unless the price reaches these levels, 61.8, and that is where this legs ends. Understand, guys? Say yes if you understand. As long as it does not breaches A. Remember, we use this is harmonic pattern, right? This is harmonic pattern A, B, C, D. Remember, this is for setup trading. Setup trading. So again, this setup remains valid as long as the price doesn't breaches A, guys. Understand? Remember, these are setup tradings. These tools are used to do setup trades, long trades. Make sense, guys? Does it make sense? Okay, now. So now you have identified this, right? Now always this is application of expansions and extensions. Now guys, try and understand. Again, if this is what's happening on my chart, I've already made the identification. Now see this. What I'm teaching you is very important now. Now this is my chart. I see this. See this. I want to see an expansion retracement of this leg. And it goes to 161.8 Fibonacci, right? I will apply the tool, right, guys? Give me a minute, guys. I don't understand where the hell is this. Okay guys, this was the leg A and B, BC, and maybe you want to take out the retracement of this, expansion of this A and B. Right guys, understands? Can you see the clarity and accuracy of this guys? Can you see this? The price is staying at 100%. This leg was established later, right? Before that, when I was trading, I had this leg, right? Guys, I'm going to show you the practical implementation of the question Gerard asked me earlier. This was the first leg I was trading, right? Right, guys? Then, obviously, I was trading this. And guys, now I see this another leg. Can you see this leg? So I'm interested in taking out the expansions level of this leg as well, guys. Understand, guys? Significant ones. Understand, guys? Can you see this? So very simple. A, B retraces, right, guys? Right? Makes sense, guys. This is how you will apply this on your charts, guys. Again, focus on the legs. Remember, you will never have this leg. Before, when I started trading, I had this small leg because price has never gone to this level, right? The price A, B, and C and went to C. This level 60. This is 61 point in Fibonacci and start going up again. So then I see another leg in construction. And I wanted to take out the possible expansion level of that, guys. Remember. So I had like this. Right, guys? That was the first. Right? Agrees? And then I found another leg. Take out the expansions level. Right, guys? Understand? You can keep both of them on your charts, guys. Now see this. See this. When you does this and you see these zones, mark them. They are very important zone, guys. These are called points of agreements within the market. Points of what? Agreements within the market, guys. Can you see this? Where two expansion levels agrees at a certain point. Where two expansion levels agrees at a certain point, guys. See the beauty of this. See the class of this, guys. Can you see the class of this? Can you see the class of this, guys? And see what happened after that. The price went up. 61.8 Fibonacci goes up, rejected at 61.8, 100%. And then again on this 100%, guys. Can you see this? This is how you apply this, guys. Understands? Everybody understands. Now I'm going to show you another leg. Can you see this? If this is A and B and price start rejecting, I might be waiting applying this. You guys understand? You guys understand this? All of this is valid as long as A is not breached, guys. Understand? Because remember, the price is making new legs A and B, A and B, and out of every A and B, you take out an expansion just to see where it can go, where the maximum the price can go. And all these expansions levels are nothing more than support and resistance to play with. Understand, guys? We clearly understand. It needs a lot of practice. Trust me. Okay, guys, I'm going to show you more examples now. This is your first leg, right? Everybody's clear, right? Super clear. Say fuck yeah, all of you. Duck yeah, hopefully it's more decent actually. I don't like the word fuck, honestly. Even no matter how angry I am, I never use the word fuck. It's just, I just find it immoral, I think. That's how been trained. I say duck or I say in angry, F-U-C-K. Bloody is better. So first of all, A and B, guys, the price retraces to the C. That is your leg, right? Then if you see this, there's another leg, right? Then there's another leg. Can you see? So it's entirely your choice. How do you want to, of which leg you want to take out the retracement and expansions. Remember, this is the threshold of which leg you want to take out the expansions and retracement, guys. So let's say how I will be trading this. Let me show you the practical example of this. I'm just showing you expansions, guys. A, B, C. Understand, guys, this will remain valid as long as A is not breached. Right, guys? You see the beauty of this, guys. Guys, trust me, this is institutional. Market will go there no matter how long it takes. This is a day time frame, guys. Can you see the accuracy? Remember, market can deviate up and down, but the leg will end here. When the leg will end, eventually market will retraces. Remember, you will never take this off. You can take out more expansion levels, it's fine. Let me show you now the next expansion level. A to B, right, guys? Understands? Understands? This is exactly how I trade. See this. Now I'm just treating these levels as support and resistance levels. That is it, guys. That is it. The price to first complete this. When the price will complete this, guys, the retracement of expansion of this move A and B has been completed. Understands? And if the price is going above it, for instance, after that, for instance, then clarity. This move to the upside is an expansion of this A and B. Do you understand? Do you guys understand? This move to the upside is an expansion of this A and B. Use your common sense, right? Because remember, extensions of this ends here, move A and B this, right? If the price is going forward further to the upside, it means this expansions of this A and B is in action and valid. Understand? Everybody understands. Everybody understands? Say yes if everybody understands, please. Come on, guys. Zen, Gerard, Khan, Boston, Lorenzo, Sharon, Tal, Lee, everyone. Okay, great. Try to understand the concept. Do not get confused, guys. Try to understand the concept of an application. The reason why you're using that tool, guys. Guys, just give me a minute. Let me ring somebody. I need to wake somebody up, actually. साढ़े 8:30 पे कहा था आपने 8:30 नहीं कहा था एक मिनट रुके तो सही ना 8:30 का नहीं ना, 830 नहीं कहा था आपने मुझे? अच्छा, मुझे याद नहीं रहा ना, फिर मैं तो 830 समझा था। अच्छा अच्छा, किधर है? अच्छा, घर वापस आ रहे हैं आप? चले आए, फिर मैं कहता हूँ इकट्ठे ही चाय पीते हैं, क्या ख्याल है? जिंदाबाद, अल्लाह जिंदगी दे आपको, हैं? ओके ओके, खुदा। ओके गाइस, हेलो, हाय गाइस, are we clear on this? Now I'm gonna apply these. Okay, let me guys, just see on the chart what I'm doing right now. Guys, you need practice. This comes with practice, guys. Remember, this is not something support and resistance. It comes with the practice. And just see how the price has rejected. Can you see this? How the price has rejected. Can you see this, guys? Now see this, guys. This is the leg, right? The price retraces this. Expansions A, B. Guys, can you see the beauty of this? Can you see the beauty? A, B. So expansion of A and B is in play, guys. 161.8 Fibonacci, 100%. The price has rejected nicely, going to what level? 61.61.8 Fibonacci. Because they are institutional levels, and that is why the price is moved by the institutions, right? And then once you add your, so these things, confluences, I will teach you later. At the end, I'll teach you how to combine this. But obviously, you guys can start combining it, guys. But remember, as long as the price doesn't reaches this A, this expansion is valid. Understand? Now I see another expansion. A and B. A and B. Right? Understands? Understands? This is your C, right? Look at the beauty, guys. These are points of agreements in the market. So if the price breaches this 161.8 and continuation to the downside, it means this A and B is valid, is under play. Expansion of this A and B is under play. Make sense, guys? Does it make sense? Everybody's clear on this, say 100%. I'm going to show you the magic of this, guys. This is the gold chart. Just see the magic. Institutional. This is your A, that's your B. And that is your C, guys. Understand? C is at retraces to 38.2 Fibonacci retracement, right? Right, guys? Guys, what did I say? The move from C is extraordinarily what? Aggressive. Okay, let's move. Let's move. Let me bring more clarity. I'll select a C which is even better. It's 38.2. The C rejects at 38.2. A, B, and C, guys. This leg A to B and then B to C, right? Everybody understands? 38.2 rejected, clear rejection. Can you see this? Hammer. Okay, now let's apply the Fibonacci expansions tool, guys. Can you see the beauty of this? Guys, the price eventually did reject it near 161.8 Fibonacci expansion, guys. Can you see? And remember, this move has started in 2008 and it ends in 2011 after 22 years. Do you guys understand the expansion, the expansions, the institutional importance, significance of expansions? Understand extension, understand Fibonacci, understand institutions are using these ones to make the calculations. Understand, guys, and hence you will be using it. Say yes if you guys understands and agrees with me. Please stop writing all that crap. focus with me, please. I don't like people non-focusing when I'm teaching, please. Everybody understand? Zan, do you understand? Gerard, do you understand? Now see this. A, B, and C. When the price was here, I'll see this A, B, and C. What I do? I do this. Can you see what happened? Can you see the accuracy of this? Can you see this? Guys, say yes if you can see this. Come on. Gerard, can you see this? A, B, and C, and see the exactness of this. And what? I see another leg. Now this has been completed. I see another leg. Now right now I have established A and B, and maybe this is my C. So if I am trading, what I do is, so guys, I've taken this. As long as this C is valid, I will be using this. Understand, guys? Simple. The C is at 38.2 Fibonacci. Can you see this? Can you see this? So maybe, I'm not sure, maybe if the C is valid, for instance, if this C is valid, then the price will go here. But if the price goes here and make another C, what I will be doing, guys? A, B, and I'll take the expansions from this C. And then all I do is I won't take out my first yet because the price hasn't completed. Understand? And utilize them as point of support and resistance. Understand, guys, completely. If you guys understand, say yes to me. I want to see a big yes. Let me show you the last example before I end this. You need to practice. Obviously, we will have more revision sessions on this. This is A, that's B, and that's your C. Can you see the exactness of this? Can you see the exactness of this, guys? Come on, can you see this? Gerard, can you see this? 161.8 Fibonacci is the beast here. Yes? Everybody understands? Say this. What was the question? What was the question? Did you use what? Khan, if somebody asking me these sort of stupid questions, it makes me really angry now. I am telling you, it goes by the legs. Legs could be at any time frames, right? Does the time frame matters? Why are you asking me these questions? Come on, guys. Clarity. I've been yelling at you guys, and you're still confused asking the time frames. Why the hell you're stuck in the time frames, guys? Candlesticks are stuck in time frames. Fibonacci is stuck in time frames. You guys do not focal on the applications in front of you. Make sense? This is A, B, and C. Can you see the accuracy of this? Where it ends, the top moves ends. Can you see? Guys, do you see this? This is institutional, guys. Use these on 4 hours daily time frame, guys, if you can. Because remember, it is when you're trading, it is easy to capture the leg on 4 hours and daily time frames. Legs are decent length. So we want to focus on a decent length legs, right, guys? So the decent length legs are normally on daily and 4 hours time frame. Hence, that is my advice. You can apply this on microsecond time frame on a leg. This concept never changes. The concept never changes. Let me show you an example. This is your A, this is your B, and that is your C. Can you see this? Everybody can see this. And see what happens. The price completed this 100% almost. This was the leg that I've selected. Makes sense? No, this is where it ends. Not that is where no, not this is where it ends. No, you're wrong. This is where it ends. That's what I said. It rejected here. That's it. Once it breaches, once it's gone up, I'm completed this leg expansion. This leg expansion, the market institutions took out the profit around 100 Fibonacci here. Makes sense, guys? This is no 161 Fibonacci because when the price gone up, right, you take this off the charts again straight away. Makes sense? Because leg's been completed. Everybody understands this. Say yes if you understand. Guys, see this. A, B, C. Can you see this? What's happened in pound? Makes sense, guys? Does it make sense? How beautifully the price came back to this level. And that is why this was an institutional target, guys. I'm expecting more to the downside as long as price remains below 61.8 Fibonacci. That will be your next target, guys. Institutional levels targets, I'm telling you. There's a possibility eventually we'll see independence of Scotland, which will bring the price to these levels. Make sense? In the coming 3 years, this remains valid. This remains valid as long as A is valid. Understands? Okay, guys. Finally, what I'm going to say to you. Sometimes 80%, this is legs. 80%, 85% market moves within legs, within calculated legs, retracements and expansions, 85 up to 85%. So at times, if you do not see, imagine market manipulates, and that is why 15% you do not see it on your charts. So do not lose your confidence in this institutional tool. Understand, guys? Those 15% when you do not see on your charts, you know what it means? It means the drivers of the market are not utilizing the tool. They are just moving the market without using the tool and without making the right calculations. Simple as. Understand, guys? It's like a driver driving on a consistency at a certain speed. So you can see the speed. Easily you can read the speed, but sometimes driver doesn't even care about the speed and keep on driving on the different speeds, guys. So then you can't see exactly the speed of it, and exactly when the institutional traders do not apply this tool whilst they are trading, you would not see the expansions levels and accuracy of the expansions levels on your chart. So it does not mean that it doesn't work. It works. 85% normally institutions use this institutional tool of expansion and retracement, and hence when they use it, you'll see on your charts. But normally when they don't use it, and that's okay, just take a trade just like this. If they take a trade just like this without using this tool, obviously you will not see your expansion and retracement levels, and the price will not respecting them. Understand? So do not get confused. It will happen 15%. Understand, guys? Let me give you example. Price moves technically. The institutions like to move the price with technical educational knowledge, but 15% they don't give a shit about technicals. They just move the price. So which we call manipulations. Hence, there's always a margin of 15 to 20%. The market manipulates, not respecting the technicals. It does not mean that technical doesn't work. Normally, they always trade with the technicals to always be ready for 20% manipulation, 20%, give it a margin when these concepts will not work. It means only this: the institutional drivers who are moving the market is not using these tools. That is it, not calculating the market and their profit taking levels based on these tools. Understand? If you guys understand, say yes. I want you to completely understand this concept, guys. The this is the core. This is the institutional trading. Say yes, big yes. Zen, everybody understand. Khan, Boston. Okay, guys, I'm going to finish this lecture. You need to practice. I have another way of identifying the expansions, but I'm not going to teach you that. The reason is you will get confused. So I want you to practice this, and on your trading view, I'm going to show you where the tool is. Guys, if you go on this, you'll see this expansion and based fib expansion, guys. You pick this, understand? Understands, guys? So when you're trading this tool, guys, go to format. So you want 100%, 161.8%, guys. Understands? Everyone understands, right? Okay, great. Give me a minute. And finally, you have this tool over here as well. A, B, C, D. A, B, C, and D, right? I don't like to use this. It creates confusion. I don't want to mess my charts up with the drawing here. Instead, I want to see the levels, clarity of the levels, what matters to me, not these bloody drawings. But obviously for teaching purposes, you can use this. Understand, guys? Remember, at the end of the day, the bottom line is it is the leg. Remember, it is the leg of which you want to seek retracement, and it is the same leg of which you want to seek the expansions. The time frame is of no significance. But again, try to see the legs on daily time frame and 4 hours, guys. That is easier for you. Just daily and 4 hours. That is it. Intraday trading, daily time frame will give you the bigger picture. But normally, when you're trading within a week, always aim for on 4 hours time frame, and that is it. It is easy. The risk and reward on those legs is better because those legs moves at least 200, 300 pips, guys. So if you catch a leg, your stop loss will be around 40, 45, 50, 65, 75 pips, and your profit taking will be a couple of hundred pips. So I focus based on risk and reward, and hence I'll suggest you guys focus on 4 hours and daily time frame. Do not confuse yourself. Understands? Everybody understands? Now, the homework is this. All of you go back to your charts, the charts you've been trading, and identify for me A, B, C, D expansions levels. Do not highlight the retracement levels because I'll automatically see the retracement levels if you mark your expansions levels, and send me your charts today. I want to see if you having an eye for that. So start with your daily time frame first, guys. Okay? Understand? Everybody understand the homework? Everybody understands this? Say yes if everybody understands, right? Okay, great. I'm going to stop the recording of this lecture. The lecture 4 is completed. You guys need extraordinary practice of this in the coming weeks and days ahead. Lecture 5 is left, which is next week, a very small lecture before I end. Today I did not only teach you how to use Fibonacci retracement and expansions in lecture 4. You have learned one of the harmonic pattern, which is the basics and base of every other calculation in the market, which is ABCD pattern, guys. Understands? Everybody understands, right? Say yes. So level 5, I will be teaching you another harmonic patterns, crab and gallery. I might not teach you gallery, instead I'll focus on the crab, guys. I'll tell you the reason of that later. I'm teaching you the levels, the patterns which market makes all the time. And lecture 5 also contains a few chart patterns which you need to learn. I'm just teaching you the ones which forms again and yet again. You don't want to learn the other ones which are not which are irrelevant here. Forget them. Take out the noise out of your trading. Bring clarity to it. Understands? And also, we will be discussing certain chart patterns again on lecture 5 before we end the training with a discussion on money management, risk management, and risk and reward. And that's what the discussion will be. But again, lecture 5 is for another day. Right now, bloody focus on lecture 4, retracements part 1, expansions part 2, and remember, legs. Remember, it is always the leg of which you seek retracements and extensions. Okay, guys, I'm going to stop the recording. Hope you understand and like this lecture, guys. I'll send you the recording of this lecture later in the US session today. Everybody, take care of yourself and a very good day.